Good afternoon, everyone. This is Aristotle Cupis with Real Wealth, and thanks for joining us on our Thursday webinar. I'm one of the investment counselors here with Real Wealth, and again, I appreciate everyone joining us. Today, we're going to be talking about something really exciting, and it's something that every investor needs, and that is insurance, right? Homeowners insurance, renters, real estate investment property insurance we're talking about today, and everybody has to have this. We get questions about this all the time from people. How much should I get? Should I get replacement cost? Should I get liability? How much should I get? And unfortunately, Real Wealth is in the position to not give, we can't give you legal advice. We can't give you advice on how much to get or what to get. But we have the experts here today to talk to us about that. And it's a new vendor of ours. So we're going to be working with a new vendor here. And if you see down below, there's Lee and Taylor. How you guys doing today?
Doing great. Thanks for having us.
Appreciate you guys. They're coming from Georgia, so I appreciate their time today. They're going to talk about the top 5 tips to buying insurance for a rental property, and as well as what their company provides. So I'm really, really happy again. So let's, before we kind of dive into things here, on the right-hand side of your screen, you're going to see a question box or a chat box. And as we go along the presentation, feel free to ask a question. If these gentlemen below here, if they're talking about something and you want them to, and you want to ask a question on a particular thing, we'll try to answer questions as we go along or even at the end of the presentation. So feel free to write that in there. And one of you gentlemen can go ahead and advance to the next slide here. We'll kind of get started on the presentation here. All right, so I'm going to read our disclaimer as we always do here. It says the strategies mentioned in the presentation may not be appropriate for everyone. Other options not mentioned may be more suitable to your specific circumstances. Consult your personal accountant, tax advisor, and/or attorneys to discuss your specific situation. Past performance is no guarantee of future results. Real estate purchases are subject to investment risks, including the possible loss of amounts invested. While every effort is made to maintain accurate and current information, the possibility of errors and/or updates always exists. So I'm going to give you a little bit of information about Lee and Taylor here. So Lee Rogers, he's the president. He's the president of realprotect. realprotect is the company, the vendor that we are working with. Now, they are a broker, and they're a division of Legacy Risk Solutions that was formed in 2014 to address the emerging opportunities in residential real estate investments. And he works with real estate investors, lenders, property managers, and marketplace platforms, kind of like our network here. And along with the realprotect team, insures over $5 billion of residential real estate throughout the United States. So that's fantastic. And then Taylor has joined the realprotect team in 2017. He maintains relationships with several key lead sources and enjoys working with them to make sure their clients get quick and professional service. And when not at work, Taylor enjoys spending the time outdoors with his friends and family. That's great. So again, welcome, gentlemen. I appreciate you taking the time today to talk with us about investment property insurance. And Lee, I guess you'll go ahead and take it away, and you can go ahead and start.
Great. We appreciate it, Aristotle and the entire Real Wealth team. We appreciate the opportunity, and we're very excited to work with you guys and everyone that you work with to provide risk management and insurance. Whether or not we end up writing an insurance policy for anybody on the call, we're always here as a resource, and we're always happy to answer questions. We view that as a value add that we bring to this relationship, in addition to just trying to sell you an insurance policy. We want to actually bring some additional value and help you think about insurance in a way maybe that you never have, because I could say a few buzzwords that or phrases that everybody would recognize. I always say, you can't turn on the TV and watch any sporting event or TV show without seeing tons of insurance commercials, right? 15 minutes can save you 15% or more. You're in good hands, like a good neighbor. All these things have been really drilled into the psyche of the American consumer, and insurance in a lot of forms has been reduced down to a commodity, where folks think about it a lot of times, and I want the least expensive insurance that I can get. And while that's obviously a very important factor in your buying decisions, we want you to be aware that sometimes those dollars that you're spending, what is covered and what may not be covered when you're spending those dollars. So we are very, very happy to be here. As Aristotle mentioned, we're realprotect. We're a national insurance broker that specializes in working with real estate investors, and we're licensed in all 50 states. We have properties insured, I believe, in either 48 or 49 of the states right now, and believe it or not, we do have some stuff in Alaska and Hawaii. I think There's a couple of random states where we have things come in and out, but we have clients really all over the world. We have clients in 14 different countries around the world. Like we mentioned earlier, over $5 billion, probably closer to $6 billion of properties insured throughout the country. And what we do is we partner with global insurers to build custom policies for the residential real estate investment industry. So there are a lot of different and fast-moving factors or things going on in the residential industry right now. And as it relates to insurance, you want to have an insurance carrier and provider that can be responsive to all of those different types of strategies that you deploy. Whether or not you're doing long-term buy hold, you're fixing and flipping, whether you're doing vacation rental, all those things, you want to make sure that your insurance is going to be written in a correct way, and that it's going to provide the protection that you expect in the event that something bad happens. realprotect, we, as you mentioned, Aristotle, we are physically located in the Atlanta market, but we work in all 50 states. We have clients all over the place. We have a team of sales agents. Taylor Stowe, who is on the call today with us, is going to be the primary contact point for RealWealth and your members and your investors. He and his team will be handling quotes and handling getting policies in place, and then the subsequent service of those. We have a team of dedicated sales and service professionals that can help answer any questions, help file claims, help get bills paid, anything that you need. And we're going to try to, our goal is to always get any questions and things handled in a quick, efficient manner so that we can help you grow your real estate business and take insurance as a worry out of your life. We want to be that kind of extension of your business, your real estate business, as your risk management partner. We can design policies that are going to be based on your actual needs. And again, we understand this business and what you're trying to accomplish, and we don't just come at it necessarily from a commodity type standpoint. We want to understand a little bit about what you're doing and how to best cover that, because we have a lot of investors that start with one property, and as they continue to grow their business, their insurance needs evolve. And so at that point, we can look at what we call a portfolio policy, where we can look at some excess liability policies to provide extra liability for you, some umbrella policies. And so we always want to make sure that we are being responsive to what your needs are as your business continues to grow and evolve. So today we're going to talk about really the top 5 tips for buying insurance. We're going to get into these in detail, but the basis of insurance, you have a policy that matches your risk tolerance. What are the differences between a landlord policy and a homeowner's policy? We work with a number of lenders across the country. Every lender has their own set of insurance requirements. Now, most of the time, the high points are the same, but every lender has different things that they require, and we want to make sure that the policy that you put in place is going to be compliant with what your lender may require. And then, look, we understand not everybody's going to buy a policy from us, and if you are working with an insurance broker, you've got a trusted agent, or you may be an agent. What are some of the red flags that we sometimes see in an insurance quote, and what are some of the effects it could have on you as an investor? And then how can you get the best quote from an underwriter? So sometimes the more information you have and can share, the better. And so that can always help sometimes in your pricing as well. So let's talk about the basis of insurance. Folks think about insurance, a lot of times folks have a negative connotation of the insurance industry, but what is insurance, right? It is you as an investor transferring the risk that you have in owning an asset from yourself to the insurance company based on the contract that you put in place. So you're, in exchange for that premium, you're getting a contract that tells you what it's going to cover and how it's going to cover and how it's going to respond. So at the very basis of insurance, again, it's that risk transfer, right? And so, one of the question that was just asked had to do with property management liability. I always ask investors, hey, do you use a property manager? And they'll say, no, I do it myself. And I'll say, well, you do have a property manager. You're the property manager, and it doesn't exempt you from following the same rules as a professional property manager. But it's important to know, too, that insurance is not intended to cover every single claim that could possibly happen. It would just be too cost prohibitive. but insurance policies do provide a lot of great coverage. So let's just talk about the very basics, right? When you have a policy, if you think about it, and we go back to maybe its most simple form, you have an insurance policy that covers your rental property, one single rental property. You're going to have generally two parts to that policy. You're going to have property coverage, and that's going to cover the structure. That's going to cover the dwelling that's on the property, and really typically any detached structures that may be on that property that are non-residential detached structures. And then the other part of your policy is general liability, and it's going to cover the premise liability that comes along with that property as well. So if someone suffers a bodily injury or property damage on that property, then you have general liability that may respond in the event of a claim. So we'll see a lot of general liability claims, and those are the types of claims that a lot of times folks don't really think about. So we see a lot of like slip and fall claims that come across. So we'll have somebody that slipped and fell and was injured. They were going up or down the stairs, going into a house. They fall and have an injury. They present a lawsuit, and so that policy is designed. The general liability portion of that policy is designed to defend and respond in that situation. A lot of times, landlords get drug into lawsuits for things that really may not be their fault or their issue, but you still got to defend yourself, and your insurance policy will provide that coverage. So a lot of folks don't think about the liability aspects of an insurance policy when they're thinking about it. They always think about the property. They think about the fire that burns the property down, or the tornado or windstorm that comes through. And so while those things definitely do happen, most claims that we have are not they're not total claims in nature. Most claims are partial claims, and we do see a lot of general liability claims as well. So those are some of the basic things that come with a policy when you're buying a policy. And we think those are, to me, I would say as you continue to grow your business and grow the number of assets you own, that liability becomes more and more important as you continue to scale your business. You want to make sure that you've got good liability insurance in place. So the second thing we talk about too, in Aristotle, maybe you can answer this to me as well. With RealWealth, you guys work with a lot of experienced investors, but you work with a lot of brand new investors as well?
Yeah, we've got both.
Yeah. So one of the common things that we see a lot of the times is folks will call their insurance agent and say, hey, I need to buy a homeowner's insurance policy, and they may not fully understand that there's a difference between a policy for a landlord and a homeowner's insurance policy. A homeowner's insurance policy means that you are going to live there as your primary home or a secondary home, or it's going to be owner occupied at some point. And so, or sometimes we'll have a situation where somebody has lived in a house and they decide to go buy a new house for them to live in, and then they'll keep their old house as a rental property, but they never change the insurance from that homeowner's policy over to what's called a dwelling fire policy or a landlord policy. And so there's been case laws, there's been claims where folks have had a homeowner's policy in place with somebody else living in it as a rental property, and those claims have been denied. So it's very, very important that you want to make sure that your policy that you have is written correctly, and that it's going to cover your exposure as a landlord. There are some insurance companies out there that will write it on a homeowner's insurance form and then endorse the landlord exposure onto the policy. But it's really one of those important things that you understand and that you make sure that you've got covered in the correct way. So that's one of the things we see a lot, especially with newer investors, that they don't realize that I do need a separate policy or a new policy if I'm going to use my same insurer for this property. The other thing we see a lot too is on a homeowner's, a lot of folks will use whoever handles their homeowner's insurance for their landlord in their rental properties and their landlord policies as well, and that's fine. There are some insurers that won't insure an LLC. Most of the folks that we deal with, for the vast majority of investors we deal with, have their properties placed in an LLC. So you want to make sure that ideally that first named insurer on your policy would be the name that holds title to the property. Now, some insurance companies won't insure an LLC as the primary insured, so they may say, hey, it's Lee Rogers as the insured, and then we'll add your LLC as an additional insured. But whatever you do, however you hold title to that property, you want to make sure that LLC or corporation or trust is listed on that policy somewhere. We think it's much cleaner to have a policy that only lists the LLC that owns the property. But we will see sometimes some insurers will not add an LLC as a first named insured. All the policies that we sell, we're going to be able to add your LLC as that first named insured. The first named insured on the policy is the person or entity that has the rights to the policy and owns that policy. So an additional insured can't make certain changes on a policy. They're going to be notified, but they can't make those changes. So it's one of those important things. Just make sure that your policy and your ownership of your assets match up. All
That's
right.
great information.
Questions? Anything that's popped up so far?
Yeah. So Jen asks, what's the downside if my name is the first name, but the LLC is the additional insured?
There's as long as that's typically if it's just your LLC and you, Jen, own the LLC, then there's really a lot of times not a ton of problem there. But if you have partners in an LLC sometimes, or if you're a partner in an LLC and you're not the first named insured, then you don't have certain rights to the policy and you may not get notification if there's any sort of issue, a non-renewal or cancellation, things like that. But if it's something that's closely held, you just want to make sure that LLC is listed on there at least, because whether, again, we go back to those claims, right, those liability insurance claims, or even a property claim, the insurance company, the first thing they're going to look up is who owns the property. They're going to go to legal tax records and titles and deeds and things like that and see who owns it, because one of the things that has to be established is that insurable interest, right? So if you own it personally, or I'm sorry, if you own it in an LLC and your personal name's on the policy, you definitely have to make sure that LLC is listed. It's just, again, in sometimes actually some insurance companies, some personal insurance carriers will allow you to insure those under an umbrella. So there could be some advantages there to doing it that way, but there's really not a lot. Again, we feel generally that it's cleaner to have it done where the first name insured is that LLC, but it certainly can be done.
Okay, thanks. Hey, that's great. One last question here. Dag asks, are you guys insurance brokers? You work with various insurance companies? Yes, Dag. If you just joined, we mentioned earlier that they are brokers. And how many carriers do you guys have currently that you shop around with?
Oh, gosh, we have, as a total company, we have a couple of hundred, but there's about 7 or 8 insurance carriers that really like this space on a national basis. And so we work with a handful of really, really close partners. Several years ago when we started realprotect, what we understood was that a lot of what was kind of emerging in the industry was being led by some of the lenders that were out there and their insurance requirements. So what we did at that time was we went to those lenders and got those insurance requirements, took those to our insurance carrier partners, and had them build policies and coverage forms and rates based on some of those lender requirements. And so we have carriers that have built policies for us because of the volume that we do and spread of risk that we have across the country. We've got a lot of preferred rates and underwriting with our carriers. So we've got really, 5 or 6 that we work with day in and day out. But as we get into different types of risk, we've got several hundred that we can access. Things like multifamily, property managers, errors and omissions. We're doing a lot of coverage right now for developers that are doing build for rent. So we've got access to all of those companies. But for the day in, day out of the things that the long-term buy hold properties, we've got probably a handful of those that we deal with.
Perfect. All right.
Great. So typical lender requirements for insurance, like I just mentioned, that was a great segue. We work with a number of lenders that have emerged in this space. Probably a lot of the same lenders, Aristotle, that you guys work with at RealWealth. And they all have various requirements depending on their funding sources and what they're doing with the debt on the back end. But some of the main things that we see a good bit of are with lenders are surrounding deductibles. A lot of lenders will say, hey, we need a property. We talked about the property portion. So in property insurance, typically you're going to have a deductible, and that deductible is going to be what you as the policy holder are going to pay in the event of a claim. And so some lenders say, hey, we'll allow your deductible to be up to $5,000 or $10,000. A lot of lenders will say your deductible can't exceed 5% of the loan value. So when you're going around shopping for insurance, a lot of times folks will say, I want to increase my deductible to lower my premium. And I would say a lot of the times, if you're brand new to investing and have one or two properties, there's not going to be a ton of premium savings by increasing your deductible to $5,000 or $10,000. And so, typically a $2,500 deductible may make sense. But sometimes your lender will require that your deductible not exceed a certain threshold. So if you're working with a lender, you just want to check that to make sure that your insurance is compliant, because what can happen is you can buy a policy, send it to them, you can get to the closing table, and they can say, hey, this is not compliant for some reason. And when you're working with us, we're going to ask that question really on the front end. We want to find out. We want to put something in place that's not going to work for you or your lender. A lot of lenders will also, and this next one we can spend really probably all day on, is replacement cost. Okay, and so replacement cost is one of those terms that I really don't love as in the insurance world, because all the policies that we write are replacement cost coverage. And what most folks, I think, default to thinking about replacement cost is, no matter what I have my property insured for, in the event of a claim, the insurance company is going to replace it no matter what it costs. Now, there are some companies that will include some endorsements on a policy that will be like extended replacement cost coverage. But typically, you're going to establish a replacement cost up front. Now, the way we handle it is we have data on the 40,000 or so zip codes that are around the United States. And we'll take that zip code and we'll apply a replacement cost factor, and we'll come out to, let's say it's in Atlanta, it's maybe $115 a door per foot. And so we'll generally use kind of a little bit more of a flexible model in order to determine the replacement cost. But we also use some tools, some software tools. Some of the most common software tools to establish replacement cost is a program called Marshall & Swift. It's owned by a company called CoreLogic, and a lot of insurance companies use Marshall & Swift's program to determine replacement cost, and a lot of that's done on a very automated basis now. When you put your address in, it'll go pull all the public data and say, hey, the replacement cost on that is X. We've seen those replacement costs increase dramatically over the last 6 or 8 months. I think there's no secret that inflation is occurring. There is significant shortage in labor and materials, and increased costs for those. So the insurance industry is really taking a really hard look right now at replacement costs for insureds and on their policy. So as the folks on the call may listen and hear, you may get a renewal notice from your current insurer that says, hey, we were insuring this property for $175,000 last year. We need to increase it up to $250,000 this year, which is significant. They may not increase the rate, but they're going to increase the coverage, which increases the premium that you end up paying. So that's a really, really one of those things that we're seeing a lot of kind of back and forth and push and pull between the insurance industry and our clients right now, because insurance companies, now in their defense, they're exposed. If they've got a house that they've had insured for $175 and it costs $250 to replace, they are going to more than likely pay that full $175 in the event of a claim, whereas a few years ago that claim may not have gotten to $175. So there's an underinsured insurance issue, and ultimately that's going to catch up. It may not catch up for you this year, but ultimately that's going to catch up. So we always offer replacement cost coverage. Sometimes we can use a more simplistic, flexible way to determine that replacement cost. And again, on a lot of policies, it's replacement cost up to the stated value of coverage that's on the policy. So if you've got it insured for $100,000 and you have a claim and it costs $200 to replace, depending on the policy wording, the policy is only going to pay $100,000. So that's one of those things too. As the market's increased, the replacement costs have increased. it's not a bad idea for you as an investor to go out and take a look and see what you're insuring your properties for, and is it enough? We've been through several cycles of this over the last 7 or 8 years, where when we first started realprotect, we had investors that were buying properties pennies on the dollar. Well, all that inventory has been used up, and folks are buying properties at really pretty high market values a lot of the time now, and the replacement costs aren't exceeding market values, where in the past the replacement costs were significantly in excess of market values. So, and then the last thing here that we'll see is general liability. Most lenders are obviously going to require general liability as well. And you may ask why. Well, that they have the loan on the physical property. Yes, that's true. But in the event that there's a liability claim, they don't want to have. They want to make sure that there's money there to defend and pay any claims that may be tied to that property, so that in the event they need to sell the property, there aren't liens or whatever, because you have insurance in this deep pocket to help pay those losses. One other thing I'll point out here as well, we'll see sometimes on the long-term buy-hold properties that's not listed here, is we'll see loss of rental income coverage that would be required. And what that is that's another one of those terms I don't love, because we see a lot of folks will file a claim that say, hey, my tenant's not paying the rent, I want to file a loss of rental income claim. That's not really how it works in our world. There has to be a direct physical loss to the property in order for that portion of the coverage to be triggered. So if there's a fire and the property is untenable, then you have loss of rental income coverage that would respond in that situation. And the insurance company, the first thing they're going to ask for is a copy of the lease in that situation. If you don't have a lease, if it's on month to month, they're going to want to look at your ledger to see that payments have been being made in order to pay that loss of rental income claim. And then if you're doing anything in the fix and flip world, you also want to make sure that and sometimes we'll see lenders include a requirement for builder's risk insurance. And builder's risk can come in a lot of shapes and forms. A lot of the times what we do, if it's more of a cosmetic non-structural renovation, we include what's called a builder's risk endorsement on the policy. And that endorsement's present, and that's going to give you coverage for theft of materials, and it's going to let the insurance company know, hey, this is a house that's unoccupied and there's work going on, and they're going to charge you a little bit more for that builder's risk in that situation. And sometimes a lender will require it. If you're doing a structural renovation or something ground up, then we do a different type of policy form that'll contemplate that. So we'll see those types of things generally for the lenders that we work with, and I'm sure many of your folks that are on the call work with as well. Any questions to this point?
Yes. So Mayank asks, how much general liability do you recommend for a single family home? And that's going to vary quite a bit, but maybe you have a idea or an average or suggestion.
Yeah. So I with a lot of the lenders we work with, they require $1 million, which is kind of the standard, which can be a standard number. We'll see some lenders that'll just say, hey, you have to have general liability. So, sometimes the insurance company, depending on who you're dealing with, will give $100,000 or $300,000 of liability. Liability insurance as a part of your overall premium is really very inexpensive. Most liability insurance has a $0 deductible, so you've got coverage from $1. The question was a little bit more direct. How much do you recommend? I recommend as much as you can get. And again, 99% of the policies that we sell are going to have $1 million of liability per location. I just feel like, again, you have this structure here, this house, what your liability is in the event you have a property insurance claim, that property burns down. But if you have someone injured on that property, then you want to make sure that you've got plenty of money that's going to be there to pay any claims. The other thing too is you want to look at, what are the characteristics of the property from a liability perspective? Is there a swimming pool? Is this a long-term rental or a short-term rental? Do you allow pets? If you allow pets, I would really encourage anyone to require that their tenant purchase renter's insurance that's going to protect the landlord in the event that dog or pet causes injury to someone else. In addition to that, as part of your lease, you want to make sure, and this is getting into the risk management part of what we do, you would want to have a pet addendum that indemnifies you as the landlord and holds you harmless against the actions of your tenant. That way, in the event of a claim, you can point to this hold harmless and pet addendum that says, hey, they're defending me and they're taking care of this. Now, tenants a lot of times may not have the ability to do that, but if their insurance, if they have renter's insurance, then that would be a response. So again, it just depends on what you allow at your properties, what the characteristics are. But in general, I recommend that you get as much general liability as you can. Just to give you an idea, $1 million of liability, if you're paying, if your overall insurance premium for a property in Atlanta is $600 or $700, the liability part of that's maybe $110 for the year. So it's really not very expensive for that $1 million. The next question we get sometimes is, can you write liability only? We can, but we don't do it a lot. We typically prefer we have to package it in with the property. Any other questions?
Okay. Another question Laura asks, is guaranteed replacement cost a thing of the past?
There are some carriers that will write guaranteed replacement cost coverage. They'll do it by endorsement. We'll see like a lot of some of the homeowners insurers that you may have folks may have their personal home insured with will maybe offer a guaranteed replacement cost. But in exchange for that, what they're going to do is they're going to require probably the highest amount of replacement cost that you can get, so they can charge you on that premium, and they'll charge you for that endorsement. But it is an endorsement that's out there, and what it is basically it says, hey, if the insurance company says you need $200,000 of replacement cost and you insure it for $200,000, if you have a guaranteed replacement cost endorsement and your property burns down and it costs $300,000 to replace, then the policy will pay $300,000. It is it's a great endorsement if you can get it. Not all carriers offer it. We have a few that will, but most of the time we don't include that. It's just it's a kind of right now, especially, it's a big unknown liability for the insurance companies as well, because if they've got that, they're really exposed. They're only collecting that premium on the $200,000, but right now in this environment with the constraints we have on supply and labor and building costs being so much higher, that's a huge unfunded liability right now for the insurance industry as a whole. So I don't know this a thing of the past, but I think it's going to be really looked at. So what some insurance companies will do is they'll offer instead of a guaranteed replacement cost, they'll do like an extended replacement cost endorsement where they'll replace up to 110 or 125% of that dwelling insured value.
Gotcha. Yeah, I know. Just so I can say something about some of the properties that our members are buying, like let's say in Baltimore, Maryland, or Chicago, where they're all brick homes, right? They're old, they're all brick. And I always have to prepare people, hey, your insurance is going to be more expensive usually because it's going to cost more to replace that all brick house, right?
Yeah, absolutely. Yeah. And sometimes you'll see a term called functional replacement cost that an insurance company will use. And what that means is, hey, we can't replace it with the like kind and quality because we're not going to do plaster walls, or we're not going to do some of the ornate molding that was done in the 19 teens and 20s when some of those houses in those areas were built, or the huge stone type edifices that were used, or full stone construction. So they say, well, we'll do some functional replacement costs where we're going to replace it with current material, so we're not going to be on the hook for going back and trying to recreate the wheel, so to speak.
Right. Okay. One last question on general liability. We'll move on to tip number 4. John asks, in general liability, what don't they cover? And he gives the example like an unlicensed contractor, for example. Do you know what would be a good example of what they don't cover?
Yeah. So one of the important things too to understand about general liability in relation to a landlord policy is that it's for you as the property owner in the premise. It's not going to be if you were acting as a general contractor for that property. If you're hiring, and again, in the insurance world, we always recommend that you hire any sub that comes on the property is fully insured, that has general liability, workers' comp. So if they're hurt on the property, that sort of thing, a lot of policies may not cover those types of activities that occur on the property, and that's why we recommend that any sub that you use has insurance. We know that's not always the case, but generally things, you want to read and understand too. Sometimes there'll be some exclusions in a general liability policy for things like mold or fungus, for pollution. So if you've got an old oil well or oil drum that's buried and there's a pollution issue, or you have a tenant that complains of getting sick because of mold, those are the types of things that aren't going to be covered. Obviously any intentional act, or if it's anything that and this is where the property management comes in too. Sometimes the risk management we talk about. If you're using a professional property manager, sometimes you're offloading some of your risk to them through that contract. Meaning, hey, they got a phone call about the mold and they didn't do anything about it or remediate it, then you can shift some of that liability from you to them. You're still going to be sued generally, or be brought into it, but you would hope that the property manager would defend you in that situation because it's really their action, or could be. We'll see things. Sometimes we'll see like assault and battery as an exclusion. We'll see animals as an exclusion sometimes. So you want to read your policy to see if they're covering dogs. If you allow dogs, you want to make sure your general liability has some sort of coverage for those types of situations. We'll see. Let's see here. Swimming pools can sometimes be excluded, or there will be language in the general liability policy that says, "Hey, the pool's covered, but it has to meet local building code." What does the building code say? If you've got self-latching gate with at least a 5-foot fence with pickets that are no more than I think it's 4 inches between. So it just depends also on the municipality. So there's things like that a lot of times can be excluded on a policy. You just want to be sure and read the fine print and understand.
Yeah, perfect. All right. Let's move on to tip number 4 here.
Tip number 4, red flags in a quote. All right, coinsurance, ACV, exclusions, low liability. So we touched on some of these things already, and without getting, one of the more complicated things that we deal with is coinsurance. So if you have an insurance policy, and coinsurance in a property insurance policy is not the same as coinsurance in your health insurance. Most folks are used to seeing, hey, I've got health insurance with 80% coinsurance. In a property policy, coinsurance is a clause that's in a policy that is designed to protect the insurance company in the event of a loss where you aren't carrying enough coverage. So some of the examples we've been using, if you have a coinsurance clause, most of the coinsurance we see is either 80%, 90%, or 100%. Now, I'll say this, with realprotect, we're going to sell a policy 99% of the time, again, that has coinsurance waived, which is very much in your favor as an investor. But if you do have coinsurance in your quote or your policy, let's just say it's 80%. What that is saying is you agree that you're going to insure that property for at least 80% of the full replacement value of the property. And so if you have a loss, the insurance company, this is one of the things folks don't always realize, is that an insurance company is going to also determine replacement value at the time of loss. So let's take the situation where a year ago you insured the property for $100,000, and you have a claim today, and the adjuster comes out, adjusts the claim, and they say it's $200,000 of replacement cost value. Then if you were carrying 100, you're only carrying 50% of the amount of coverage you should have. Now, if you had 80% coinsurance clause, that would, if you were carrying 160,000, that's 80% of 200, you would have not been in violation of the coinsurance clause. But because you were only carrying 100, you're only carrying 50%, they're going to apply a coinsurance penalty, and they're going to take that claim. Let's say you have a claim that's $50,000, they're only going to pay roughly, there's a calculation, but for simplicity terms, they're only going to pay $25,000. So that not only do you have your deductible that's going to be applied, you're also having a coinsurance penalty that can be applied. And there's a lot for policyholders right now. There's a huge unrealized liability for them out there that for coinsurance, if they have coinsurance on their insurance policy. You really want to make sure your values are there, because it doesn't matter what you insured it for. At the time of loss is when they're going to redetermine what the replacement cost is. And we see, again, fortunately, Real Protect, we don't have to deal with it that much because, again, most of the policies we sell are going to have coinsurance waived. But we'll also have some insurers that will say, hey, as long as you're insured for $80 or $85 a foot, we'll waive coinsurance. But if you dip below that, then we are going to apply a coinsurance penalty. So you just got to read the fine print and understand what the policy says. ACV is another one. ACV is actual cash value, which is a depreciated loss settlement. So where we talked about replacement cost earlier, replacement cost is a loss. If you have a loss, they're going to replace with like, kind, and quality. ACV is going to be depreciated. We see a lot of depreciation on roofs. That's kind of the easiest one that folks understand is you got a 20-year roof and it's 10 years old, they're going to depreciate it 10 years, or half the cost. The insurance industry's replaced tens and thousands of roofs, hundreds of thousands of roofs over the last several years, especially in certain parts of the country. And the response has been, you want to look, folks, I'd encourage you to look at your policy. And sometimes an insurance company will say, we're only going to pay ACV on roofs, or they may say, we're going to pay ACV on any roof over 10 years or 15 years old, something like that. Because a lot of folks would get to the end of the life cycle of a policy or of their roof and discover they needed to get it replaced, and then they would go and file a claim on the insurance and let the insurance company pay for a new roof. Now there is technology now. One of the things too, we'll get claims for roof claims a lot of the times, and for a new client, and they'll file a claim on a hailstorm, and there hasn't been a hailstorm since they've been a policyholder of ours. So the insurance industry and adjusters now have technology and data of hailstorms exactly where they went through, or windstorms, and they're going to point back to that data and say, hey, there hasn't been a storm here that's produced hail that was 7 centimeters. There was one back in 2019. You need to call your insurer from back then if that's the case. And a lot of times folks may have bought a property that may have missed an inspection that has hail damage, and your current insurer that didn't incur that claim is not responsible for replacing that roof. They're just not. And that's a hard lesson sometimes folks learn. I'll say this about claims too, and this is maybe a little bit off topic, but every insurer that we work with, they want to pay the claims that they owe, and they want to pay it as quickly as possible. I've never talked to a claims adjuster that wanted to pick on one of our policyholders not to pay a claim. The insurance policy is a contract, right? And the contract lays out what they're going to do and what they owe. Now, sometimes the amounts can be in dispute, and that's certainly fair game. But if something's not covered, then it's going to be supported by what the language says in the contract. And sometimes, claims is where there's the biggest heartburn, they're the biggest inconvenience many of us ever face. The best education anybody ever gets in a claim is if they've had an auto claim or a homeowner insurance claim or a claim on an investment property, because you learn a heck of a lot about insurance at that time. The other thing you want to look at is exclusions. And kind of going along with that are the perils that are covered. So there's three perils in insurance that you want to look for in an insurance policy. So there's what's called special, broad form, and basic form. The special policy form, which is what we sell mostly, it means it's covered unless it's excluded. So the common exclusions there, like flood and earthquake, and there's several other things that are going to be listed as exclusions. But special form is the highest and best class of coverage form. Then you have broad form, which is there's 17 perils of broad form that are specifically listed as covered. Then you have basic form. And so basic, I believe there's 8 or 9 perils that are covered under a basic form policy. So you want to understand, if you get a policy, wow, that's really inexpensive, that's a great price. Well, read the fine print, see what the coverage form is. Is it for basic perils, broad form, or special perils? And also understand what those exclusions are. We'll see a lot of exclusions around vacancy. So depending on what you're doing and what type of property you have, if the property's been vacant, sometimes 60 days, 90 days, there could be a difference in what's covered, or what doesn't mean everything's not covered, but a lot of times there'll be some exclusions around theft and vandalism. And normal wear and tear from a tenant's not vandalism, by the way. We get a lot of claims too. Folks say, I've got to change the carpet out, and we'll send an adjuster out, and it's just normal wear and tear, and that's not an insurance claim. Now, an intent, you evict somebody and they, steal all the appliances and kick holes in all the doors and all that. That can, that's a little bit more vandalism than just a normal wear and tear. But understand what those exclusions are. We'll see a lot of those types of exclusions, theft and vandalism and that sort of thing, and those are typically excluded under that basic form as well. And then low liability, we'll see a lot of times, we talked about it already, that liability is really not that expensive to increase your liability limits. Some carriers will only go up to 300,000 or 500,000, and that's okay. You just got to assess your risk there. But make sure, number one, that the policy has liability on it. Number two, that it's going to be adequate for your needs. Any questions on this to this point, Aristotle?
No, we have other questions coming in, but they're more applicable towards the end of the presentation that we'll go through. So
great. All right, well, let's move on. So excuse me, how can I get the best quote from an underwriter? So that's a great question and a great thing to talk about. So we look at this a couple of different ways. We like we mentioned, we want to be your insurance partner. We want to help you grow and scale your business, but you got to start somewhere. So if you start with one property, then that's great. We would love to have you as a client. We'd love to work with you. Some of those things that you can do, though, to help you, anybody, whether it's us or any whoever you're using for insurance, is to try to find out. Now, when you're buying a property, and I know properties are inspected, is to give that agent as much of that information as you can. So if you know, typically though, when the roof was last replaced, when the heating and air was updated, when the plumbing was updated, that electric's on, not on fuses, on circuit breakers. Those are that's the type of information that can allow any insurance company to give you the best rate that they possibly can. What's the security like? What's the property management like? What is if you're using a third-party property manager, we've got really what types of screening is that being done, whether you're using a third party or if you're doing it yourself. We found that good property management leads to much fewer claims. One of the big things that insurance companies are going to look at as well is your prior loss history. If you're somebody that's filed a lot of claims, that's going to hurt you. It's going to hurt you in the future. So those are some of the things that we feel like really can help you stand out. Obviously, if you have a claim and it rises to the level of needing to be filed, you need to file it, and that's what insurance is there for. But the other part of what we do is we like we mentioned, we want to help you scale and grow your business. And so what we'll often do as well is you reach kind of a certain threshold, say 5 properties or more, we'll look towards doing a portfolio policy for you where it's one policy with multiple locations. So you have one policy, one bill, one renewal date. And as you begin to continue to get that scale, it's still, believe it or not, it can be a very human business because we deal with underwriters who are people, and we can call and say, hey, this is somebody from RealWealth. They bought these properties that have been inspected. They've got, they passed, they've checked all the boxes. They've got professional property management. They are requiring their tenants to buy renter's insurance. They are doing, annual, semi-annual updates on filters and smoke detector batteries and all those types of things, like just those little things that you probably do anyway. We put that into a narrative, and we can get this portfolio underwriter a lot of the times to say, hey, yeah, I'll give a better rate here. Spread of risk as well. We're seeing a lot of build for rent right now, and so you'll see investors that have concentrated risk. Well, if you've got a little bit of a spread of risk, sometimes that helps as well, because if you have that one big storm that comes through, in the hailstorm, and you got all your properties in one neighborhood, that insurance company is going to have a lot more concentrated risk than they would if it's a little bit more scattered. So those are some of those things that we feel like will really help you get the best quote from the carriers that we have great relationships with. All right. Oh, we're to the questions.
Yeah, perfect timing here. So we got some really good questions here. We have some time to answer a lot of them here. So let's roll through. This is a general question that several people are asking here. But the general question that I see here people are asking is like a master policy, or what some people are calling is a portfolio policy. But a master policy, as you know, covers all your properties. But do you guys offer that? And if not, like for example, somebody asked it, or somebody said, hey, I own, a dozen properties in all these different states. Can I get a master policy, or how does that work?
Absolutely, yes, absolutely. We write master policies. That's our preferred business. That was what we love to do, and we can insure properties across all states in a master policy. So it's one policy for all those properties. What we would do is we're getting a little bit more information. We've got an application, and Taylor Stowe, who is going to be working with a lot of the Real Wealth members, is going to be a great resource, because Taylor's worked with investors, a lot of beginning investors, and a lot of really experienced investors as well, to answer those questions and walk folks through. But what we do is we have an application that we get. We have what we call a statement of values, which is an Excel file with all the property addresses and some of that information we were talking about: year built, square footage, foundation type, year of the updates, as much information as we can get. And then we'll take that and we'll send it out to all of our carriers, and along with that narrative, and then we'll go out and create a competitive scenario for you. We want to understand who your lenders are on the front end, so that we can design the policy to make sure it's compliant. And then we'll create a competitive situation among our carriers, and we'll bring back the best rate that we can. And then we'll present those options, and off we go. It's a great question. We love doing that business, but we also sometimes have one-off type situations as well. Hey, I'm buying this one property and this lender's being difficult, and because we encourage you at some point to look at what are the levers you can pull to save money on insurance, right? One of those is higher deductibles lead to lower premiums, things like that. And so but the master policy is something that we specialize in, and we love to talk to your members about.
Oh, that's great. That's great. So that's a great answer there. Okay, I have a few people asking about umbrella policies. An umbrella policy, which kind of goes back to your liability topic that you're talking about. But people are asking, is it possible to get umbrella policies? Do I need to get an umbrella policy?
Yeah. Like I mentioned, I think I made the statement earlier in the broadcast. I would encourage folks to get as much liability as they can. I mean, you've got these assets that are worth, if you've got 10 houses, you've got, a couple $1 million at least, generally, in assets that are sitting out there. And so an umbrella policy or an excess liability policy is extra liability or umbrella liability that sits over all the underlying insurance policies, the general liability. So it relates to liability only. But in the event that you have a really bad claim, then the umbrella policy comes in over and above your underlying or your primary liability to pay extra claims. And they're not overly expensive. We have, for a couple $1 million for some of our carriers, it's, as long as it's long-term rentals, then, typically it's $800 to $1,200 per year for about a $2 million policy. We have seen some hardening up in that market, especially for the really large investors, when you're getting into hundreds of properties. But for the smaller investors that have 30, 40 properties or fewer, it's really very affordable. And a lot of that stuff is what we call slot rated, so they're not going to charge you. The insurance is not going to proportionally go up per house. It's going to be typically a flat fee for the year, and it's very, very affordable in general, and we encourage it. The other thing too, I wanted to circle back real quick on the master policy as well. I want to be very clear. The way we approach this entire industry in this market is we write a policy on you. You're the client. We don't use a master policy that's not in your name as the first name insured. There are some policies and there's some companies out there that will use master policies that may be in the name of an association or a buying group, and then you're an additional insured under that policy. That can make it difficult to get umbrella coverage, because not a lot of umbrella carriers like those policies or those purchasing group policies. If we're writing a master policy, we're just looking at you, and you as a standalone entity. And that's our philosophy, and we think that's a much cleaner way to do it.
Yeah, gotcha. Hey, we're going to answer a few more questions, but can you go to the next slide? We want to put up Taylor's contact information. And Taylor, I know you've been chomping at the bit to talk and introduce yourself. But we have some people asking about, how to contact you, et cetera. So we're going to leave this up for everyone to get. And by the way, realprotect, Taylor's information is on our website at realwealth.com. If you go to the resource, you log in, go to the resource page under insurance, you're going to find all his information there too. But this is Taylor's information. Taylor, do you want to say anything about your contact information or what people can expect when they contact you?
Yeah, absolutely. So feel free to contact me either by email or phone. If you're doing portfolios or the larger deals, or something that you think the in or out, and you want to tell that narrative, please feel free to give me a call. And sometimes it's much easier to hop on a phone call and talk for 15 or 20 minutes than send emails back and forth. We're also going to have a quote page it's a Real Wealth specific quote page for all the Real Wealth members. And that will be listed on the website also once we get that up. And that'll be more for the investors that have a couple of houses, because you're going to have to fill out all the information, but at least the information is there and you can use it. But again, the portfolios, or even if it's a single investor and you've got 2 properties and you just want to kind of look at the insurance, that's what we're here for. And we want it insured correctly. Again, like Leah said multiple times, whether we do it or somebody else does it. Insurance, the whole thing around insurance is there's not one policy that fits everybody. Tell us what your risk appetite is, what you're looking to do. Is this your retirement? And you go, I don't want to lose it and I'm scared of it, so I want to cover for more. Or I've got 250 properties. I can, scale back the insurance a little bit, or look at it in some different ways, of modeling and doing some different things and really looking at the spread of risk. So I think a phone call is a great way to just kind of introduce and kind of let people know what's available out there. So I look forward to hearing from everybody and look forward to working with you.
Yeah, perfect. Thank you. Corky, will you be available to us, or available to the members once the policy is in place? Because she's saying that the company that they use now can never get back to you and hard to reach and things like that.
Yeah, absolutely. My phone number and email doesn't change once the policy's found. So we do have a service team that will deal with most of it on the back end. But absolutely, call me for anything, and I'm more than happy to help you or point you in the right direction.
Yeah, and expand on what he
perfect.
Said. The service team is there to handle some of our servicing functions, right? If you have a billing question or if you need proof of coverage. But if you're not getting the service you need, or if you have a question about, hey, I'm worried about this, or what about this scenario, Taylor or I or any of our other agents are always available. But Taylor is our main point of contact with Real Wealth and does a fabulous job of, again, I think sometimes that the art of a phone call has been lost a little bit in this day and age. And this is not anything that's, insurance is not something that I think that needs to be dealt with by cute texts and cute videos. Sometimes it needs to be, hey, it's a conversation and we want to understand. So it's a little bit old school maybe in some of the ways, but we've got the new school stuff as well. But at the same time, like you mentioned, this is really significant assets and significant investment, and we want to make sure it's protected.
Yeah, great. A couple more questions here. So this is actually a really good question, and maybe you can answer it. John asks, can you list the top 3 types of claims that you see out there?
Yep. Vandalism and theft. We kind of lump those in. We'll see a lot of, I mean, I can't tell you how many claims that we see where properties are being renovated or are vacant. And 38% of our claims occur in vacant properties. So if you have an insurance policy that's getting charged more because it's a vacant property, which it's not ideal, obviously, it's for a good reason. Hail, we see a lot of wind and hail claims, particularly across the Midwest, Texas, Oklahoma. I was just in Texas this morning and got back. I mean, and there was a line of storms that came through. My flight got diverted around some storms yesterday, and then had to wait this morning a little bit till they got out of Atlanta. And then fire, we see a lot of fire claims. And again, most of the fire claims we see are not total fires; they're just small. But those fires can cause a lot of damage with smoke and water. When they're putting them out and that sort of thing. So I'd say as far as frequency, it's going to be theft and vandalism, then hail, and then probably fire after that.
Perfect. Okay. Maria asked, are you guys having any difficulties in writing policies in Florida with hurricanes and floods and things like that?
No, we don't have any. We don't have any problems now. There will be some times during, especially hurricane season, where insurance companies will put what are called binding restrictions on. And what that means is, hey, there's a hurricane out there in the Gulf or the Atlantic, and it's projected to come towards, whatever part of the country. Florida is the most common. They're going to put out what are called binding restrictions, where, hey, we won't bind any coverage until the storm has passed and we know what the damage is going to be. What can sometimes happen as well is, in Florida, certain insurance companies only have so much capacity where they can only write and take on so much risk in a certain zip code or county. But because we represent so many different companies, we do a good job of managing that capacity. And our carriers have reserved capacity for us because they know that we're going to have opportunities to insure properties there. Wind season's coming up, June to November, although that back end has gotten a little later over the last few years. So wind season can be a very active time, and it's coming up here in a few months. So
perfect. And Rory asked, you insure homes in coastal Florida? Yes, they insure in all 50 states, so they can definitely help you out there. Might be more insured. I'm sure it's more expensive in Florida, right, or along the coast if you're down in the Keys or Miami or something.
Yeah, the Keys would be really tough, but everywhere else in Florida is pretty fair game. The one thing too I would encourage folks is, and this is a little off topic maybe, but it's a risk management thing, is when you're buying a property and looking at, I think Aristotle, you guys probably have this as part of your counseling, is to check the flood zone on a property. Because if you buy a property, you get this great smoking deal on a property, and all of a sudden you get to a few days before closing and they say, oh, by the way, we need flood insurance, and there's a ton of variables that go into pricing flood insurance. That can really kill some deals sometimes. So just check the flood zone. We're happy to help. You can go to FEMA.gov and do some flood checking yourself, or it's usually in an appraisal, or you can, some local resources you can utilize too when you're looking at properties. But the flood zone is a big thing if you're in a property in flood zone. And that's going to be any property that's got in a flood zone that starts with the letter A or V. V means it's basically on the sand, but if it's letter A, that means it's in a 1 in 100 year flood zone. Most properties are in what's called a flood zone X, but if you got something in an A, you're going to be required by a lender at least to buy flood insurance. It doesn't matter what the flood zone is on a property, by the way. Doesn't mean it can't flood, but flood is an excluded peril under every single policy form, and so you have to buy a separate flood policy. And if it's in a flood zone A or V, it's going to cost you more than if it's in an X.
Yeah, gotcha. Okay, great. Okay, last question. We'll wrap it up here. David asked, when evaluating carriers, do you take into account customer service or ease of covering claims?
Yeah, so absolutely we do. The carriers we represent, we're going to service all of your business. Some of our carriers, you'll have the ability to do some self-service, but most of the service runs through our office and through our website. In regards to claims as well, yes, exactly. Certain carriers handle them better. I would say, some companies we represent handle a claim from start to finish. Some we have are going to send out a field adjuster. Most carriers are going to send out like a third-party field adjuster to adjust a claim, and then that field adjuster is going to have to report back to the company. Now, if we're using an overseas company like Lloyd's of London, who we use a lot, those claims reports have to come back, be sent to London, approve it, come back. So it can be maybe a little bit longer, but generally most of our claims are settled within 30 to 45 days, and then the payment's issued. But there's some of our domestic United States insurers that have their own internal claims adjusters, and they're making those decisions and maybe a little bit quicker. Our job is to take that claim, report it, and then to advocate on your behalf and on the insurance company's behalf to get the communication and to make sure you're getting the service you need. Again, you may not agree with what the claim amount is, and that's not always the final end all be all, because those things can sometimes, you can have supplementals or additional damage that's discovered. But in general, our job is we want to make sure that we help you get that claim filed and help you get it closed out as quickly as possible.
Perfect. Okay, guys, well, we're going to wrap it up here. I know we have some other questions I couldn't get to. I'm sorry, but if you have any specific questions or just want to reevaluate your policy or look at options, get in touch with Taylor here, because I think I know what I'm going to do. I know it sounds boring, but I'm going to tonight or tomorrow or maybe this weekend, I'm going to go through my policies and I'm going to read them, because I'm kind of curious to see what my own rental property and policies include and don't include. So I'm kind of curious. Now you guys have piqued my interest in going back and looking, because the cheapest insurance is not always the best insurance. And, you know, like you said, everyone's different. Everyone has different risk tolerances and everything. So contact Taylor to get a quote on a new property you're buying, or if you're considering shopping around, you want to know your options. These guys really know their stuff. So I appreciate you guys coming on. Yeah, so I appreciate everyone joining us on the call here. And Lee and Taylor, I really appreciate your insight and everything. And we'll be talking with you guys soon again.
Great. Thank you very much for the opportunity.
Thank you for having us.